Going live.
All right. Welcome, everybody. Thank you for joining us. This is Jason Clement. I'm the CEO and founding partner for Sports Facilities Management. We appreciate everybody's patience. We're working through some technical difficulties. It appears that everybody's doing a webinar at the same time right now, which is a good thing while we communicate, from our own homes. It's a unique time, obviously, not just in our industry, but for the country. And like so many times in recent history, if you think about post 9/11 and 2008, our industry, youth and amateur sports tourism, has always bounced back. It's proved to be recession resistant. And we believe once we get through the health portion, which is a very important portion of this situation, obviously, that we will be leading people back into our communities through our sports tourism, as well as our community recreation leagues, camps, clinics, and fitness. The venues that we have, all of us on this call matter. They will be leading that comeback, and we're going to be here when the time is right. So today is about planning for and bridging the gap until that time is right. As you know from signing up, we're going to be speaking a lot today about money-saving measures for owners and operators. The present situation, we're dealing with it on two fronts. The first front is the health and safety of our guests, as well as the users of our venues and our team members. Obviously, that takes precedent, and it has over the last couple of weeks. Secondly, and just as important, we're all dealing with the economic ramifications of our businesses, our operations, and our venues, either partially or fully closing as well. On the health front, SFM has been in dialogue with the CDC. Thanks to our partnership with the Aspen Institute and the Project Play 2020, we have built a relationship with the CDC, and they've been very influential in communication with us, dealing with what we're doing and how we're handling the health portion of the crisis over the last couple of weeks. We're going to spend most of our time today talking about the economic outcome of this, and that's what this webinar is based on. If you have questions about what we're hearing on the health side, the timing, the impact it's going to have on our industry, and when and how kids, adults, families come back to play based on the health, we're participating in another webinar tomorrow hosted by the Aspen Institute with the CDC and some of the other thought leaders in the industry. So I would encourage you to listen and go on to the Aspen Institute Project Play website to learn more about that webinar. We've also posted that on a number of our social media platforms. So once we get through that health portion of the crisis, and we will, it's incumbent upon us to make sure that we're coming back, and we're coming back strong. Whether that's 30 days from now, 60 days, 90, or even 6 months, what we want to do today is talk about some of the tips that we've used, some of the practices and practical tactics to bridge this gap and to set us up for success on the comeback. We by no means have a goal of self-promoting right now. What we're hoping to do is just to provide some ideas that those of us contributing and participating on the webinar here can take one or two that will make an impact as you bridge your gap as well. And when we get to the question and answer, roughly 45, 50 minutes from now, we're positive that we're going to learn from others on the webinar as well. So please feel free to share what you're doing. If there's something we don't cover that you think it's instrumental and important, we'll make sure that we give credit where credit's due. The truth is, a number of the tactics and strategies we're about to talk about, we've borrowed from others as well. We're all in this together. It's been a difficult time for a number of organizations. We know just in conversation with a number of you that are on this webinar that you've had to furlough, in some cases, your entire staff. You've had to lay off a large number of people, and we know how challenging and difficult that is. The goal here is for us to circle the wagons, come back together so that we have organizations, operations, and venues ready to go when it comes time to lead the kickback and the comeback. So the goal is for us to learn together here, and we'll do so as part of the question and answer. So with that, here's the agenda and what we're going to cover. We're going to talk about the immediate response that a number of us have made over the last 7 to 14 days in containing costs and mitigating the expenses that we have as we start to bridge that gap. Then we're going to pivot to navigating the crisis, talking about communication, leadership, and certainly one of the big benefits that was signed into law on Friday was the CARES Act that the president signed into law. And so we're going to walk through that as well to talk about how that is being applied and can be applied within our industry, both for small business for-profits as well as 501c3s, and a discussion as to whether 501c6s and other organizations that are represented on this call can and should apply for it. In addition to that, there's a strategy around protecting the revenue that we have and building as much capital over this time as possible so that we can weather the storm. One of the big challenges we're all dealing with right now is we don't know when the end date is. So what we want to do is maximize as much as possible the capital that we do have and that we can acquire from the government and other organizations that can provide some support so that we can move forward from there. And then lastly, we want to talk about the strategic planning for recovery. So I believe we have a poll that's been put up because of the technical difficulties early on here. I'm flying a little bit blind, but I believe we have a poll up that we're going to be able to check in with you about which of these topics are most important. And feel free, I think you have the capability to check on multiple boxes as well. It's going to allow us to steer the conversation in the areas that are most beneficial to the people on the call. While that poll is going on here and being conducted, I'm going to introduce you to our panelists. The first is Lori Moore. She has a background in tourism destination management before joining SFM. She then became the general manager for Rocky Top Sports World. She has a very unique perspective in that in 2016, those of you on the call may recall, Gatlinburg and Sevier County, where Rocky Top Sports World is located, had a significant wildfire that caused and wreaked major damage across that area. Rocky Top Sports World at that time became ground zero for the emergency response team. The building and the complex were converted into the headquarters for the American Red Cross as well as the first responders, fire, police, safety, and such. In addition to that, portions of the indoor facility were converted to makeshift housing for those that had to evacuate their homes during that fire. And I believe we housed at one time almost 2,000 people that were living out of that complex over the course of a few weeks. So Lori has some very relevant experience, certainly in tourism, sports tourism, managing venues, and also converting those venues and managing in a crisis situation. Also joined with us today is Bruce Rector. Bruce is the general counsel for sports facilities companies, SFA, SFM, and SFD. Prior to joining SFM, Bruce also managed a venue in Kentucky, KBA, the Kentucky Basketball Academy. So he is well versed in operations and also has had a career, I was going to say long career, Bruce, but I don't want to age you, a good solid career and great experience in risk management. And he'll be speaking a little bit about risk management, mitigation, insurance, financing, as well as he has spent the last 3 days neck deep in the CARES Act and some of the other legislation that has been passed. So he'll be providing us some input from there. Additionally, we have John Sparks who's joining us. John spent the first half of his career in the U.S. Navy for 20 years, working on nuclear ships and destroyers. He was in charge of the engines. and has spent the second half of his career managing sports and entertainment venues. He has opened and managed notable venues, large arenas from the Barclays Center to Atlanta's arena, where the NBA and NHL teams have played, the Citrus Bowl in Orlando, and the San Antonio Spurs arena as well. And as you can see from his backdrop, he's in his home office and probably showing off some of his bling bling. He has 3 championship rings from his time in San Antonio, and is a great student, of Greg Popovich and all of the leadership lessons that came across there as well. John presently manages the Hoover Met Complex as the SFM general manager and account executive. That complex includes a minor league stadium, indoor, outdoor, tennis courts, RV park, and a number of items. And John has just been a wealth of knowledge as we've been managing this process over the last couple of weeks, and we look forward to sharing his perspective with you as well. Okay, we've got one other poll for you just so we can understand who's on the call with us in terms of introductions. We'd love to hear from you and understand your background and where you're coming from so that, again, we can tailor as much as possible the presentation to your needs. So again, if you're an operator or a facility owner, a CVB or a DMO, please feel free to check what boxes you fit there so that we can tailor some of the presentation and content best to you all. While you're filling out that poll, we want to talk a little bit about where varying folks on this call are coming in from. We have some that we know are in the planning and funding stage of their development. We have others that are under construction right now. They're in development. And then we have some, probably most of us, that are operating different venues right now. And the spectrum of those operating range from very mature operations that have been open for years to those that have just been opened, and we're managing some of those in the last 3 to 6 months. In addition to that, we've got those that are still ramping up their operation. They're in their infancy or their adolescence within their first couple years of operation as well. So we recognize that we're speaking to a number of you that are on different levels of that platform and scale. We're seeing this current situation impact each of those areas in development in different ways, and even by region and location. As an example, we have venues under construction right now that are planning to open this summer and fall, and they're in New Jersey under construction. The reality of that is that that's one of the hot spots right now, and construction is being deemed non-essential. Other areas of the country that are under development, construction is an essential service, so it is continuing to move forward, albeit at a little bit different pace. So we recognize that we're at varying degrees of input there, and again, on the operational side, there are some of our operations that have a safety net of working capital based on operating in a surplus for many years, and we have others that are in their first 3 to 6 months of operation, and they're working through right now where that safety net and where that capital is going to come from. So from our perspective, we are focused on these urgent priorities, and what we're hopeful is that I know all of us are focused on portions of this. We're hopeful that this is comprehensive enough that it provides some ideas and thoughts around areas that maybe you weren't focused on that you could be. Step one for us was to protect our employees and customers. We want to keep everybody safe and healthy. As I mentioned, we're plugged into the CDC during the decisions around when to close, what to close, and how much of the building to close. What's important at this stage is that we've got full transparency with all of our stakeholders, including our customers, our building owners, our investors, and certainly our employees and team members as well. We immediately jumped into a mode of reforecasting based on different scenarios, again, based on different regions and where the hot spots, and I think we've all heard enough around, unprecedented, words like unprecedented and the curve. But depending on when that curve is escalating in different areas of the country, it's impacting different venues in a number of different ways. So what we're doing is stress testing P&Ls to look at the very likely scenario based on the dates that we have. And then we're also stress testing it toward the extreme downside. It's important to do so that we're prepared to make the decisions we need to, even in the scenarios that we think are less than likely as we move forward. So we're going to talk about each of these particular areas, but I think as a starting point for our panel here is strategy or priority number 5, and that's to conserve as much cash as possible. So I'm sure all of us on the call went into immediate expense elimination, and there are a number of private venues represented on the call here that have certainly led the way in finding ways to get innovative and creative in containing costs and mitigating the expenses. So Lori, I'm going to kick it over to you first and just ask that you talk a little bit about the venues you're overseeing, managing, and working with. Talk a little bit about some of these decisions that you made immediately to eliminate some of the variable expenses so that we can affirm for those on the call that they're doing everything they can and should, or maybe even picking up a couple of tactics that they weren't thinking about.
Well, first and importantly, can you hear me?
Yes, you're loud and clear.
Great, that's wonderful. Thank you. Obviously, our first step was protecting our most valuable resource, which is our employees, and being transparent with them about as multiple events were postponing or canceling, that we were keeping them apprised of the situation and so that they could make the best choices for their families. Obviously, a lot of those within our venues fall into the part-time category. So keeping them updated on the current situation of the venue was our number one priority. And also, from a business point of view, that is a large variable expense for us, that part-time labor expense. So that was our first priority. Also, really truly getting in the weeds of our budget was looking at any consumables that were in our food and beverage department. The last thing we wanted to do was have to write a lot of that off as waste. So anything that could be put in the deep freeze, it was moved there. Some things were donated. Some things were returned back to the distributor, sodas that were going to hit their expiration date. And most of our vendors have been very welcoming and helpful in letting us do that to gain credit. All of course, an easy one for everyone here, unfortunately, was all travel was halted. So no business trips are hitting the books right now. Our marketing expense, we have halted our marketing spends other than providing email and social media notifications to be able to engage our guests and our visitors. And by that, we are working to provide skills training for athletes and coaches that are a part of our network, and to also give ideas for families about staying healthy and entertained during this social distancing or sheltering time. Only utilizing those channels that are free for the most part to engage with our customers, but really looking at all other marketing expenses for the most part to be able to come back with a big bang when we are ready to reopen again.
And Lori, one of the poll results, the biggest thing people are looking for that are on the phone call here is how we're prepping for strategic planning, for the recovery, how we're preparing for the comeback. So conserving that marketing capital is really important as we consider how we want to come back, with a bang and get out in front of our communities if we're a local venue or operation, or into the sports tourism industry, for those that are bringing people into the community for visitor spending. So we'll talk a little bit more about that in just a second. While we're talking about cost mitigation, John Sparks, how about on the fixed expense side? What are you seeing, and how are we leading that conversation?
Well, I think that we need to look and work with our partners, depending upon who manages your third-party services, such as housekeeping, HVAC, maintenance, things of those nature, trash pickup, all those contracts. Whoever manages that contract, our municipality was very proactive in bringing in a controls company to reset all of our thermostats and reset your lighting controls and cover all the bases as if you were in a non-occupied state. So you're conserving those electrical dollars and trash pickup. We get trash pickup on a routine basis and we're charged by the pull. We just deferred those costs and told them that when we're ready to pick up again, we'll call you. As well as, some of your standard event-related equipment needs, golf carts. We have a big 150-acre facility, so we rent numerous amounts of golf carts, gators. We just took them back and said we'll call you when we need them again. And so deferring cost back to the marketing and advertising, deferring whatever advertisement is not needed to a later date. And most of our clients and most of our vendors have been very responsive about understanding we're in a non-business situation. So I think this just being proactive and understanding who manages what contract, and then deferring as much as you possibly can.
Yeah, that's good. And Bruce, from an insurance standpoint, from a debt service perspective, we have a number of private operators on the webinar as well. Can you talk about conversations with banks and insurance providers?
Yes, there's been relief from the CARES Act specifically for folks with residential mortgages on those payments and government-backed loans, loans through government programs. On a commercial area, it's a little bit more complicated, whether or not your mortgage or debt payments might be either stalled or put off for a while. So what we suggest is that you contact your lender for each debt instrument and to work with them to see what they are either required to do for your particular loan or what they may be willing to do for your particular loan. The reality is the banking industry doesn't want the loan market to collapse. And so what we're finding is even though many lenders are not required perhaps to work with you on your payments for a period of time, they are willing to voluntarily do so because they want to make sure that as many borrowers as possible come out of this in good enough shape to keep the loan and not have to foreclose and not have to go through a process in a situation that is in their business interest, the worst case scenario. On the insurance end, most insurers are willing to work with you on your workers' comp payments. That, of course, is trued up. Those premiums are trued up at the end of the year, each policy year. They take what was forecast and they match up your payments and your premiums to what payroll you actually incurred. Some of you pay those through a system where it's just drawn out of each payroll, and so it wouldn't affect you much. But those of you that pay an annual workers' comp premium, your insurance company will probably work with you to reforecast that payroll and to adjust those workers' comp premiums down midterm. On general liability umbrella insurance for your entity, the insurers are not at this point willing to readjust those premiums mid-year, mid-policy. But if the thing continues to drag on, there may be pressure, there may be government directives at some point for them to evaluate or go back and reassess the general liability and umbrella premiums at some point. Your GL and your umbrella is based upon a combination of a number of things, but it's primarily the nature of the risk, the types of activities that you are holding, events that you're holding, and the forecasted revenues from those particular activities. So it would seem as if the forecasted revenues are falling because of this. There would need to be some adjustment at some point for your general liability premiums. And right now, it would be totally voluntarily for them to do that. But as time goes on, they may be more willing. And that's just something to continue to be in good communication with your insurance provider, your broker, to really push them to make sure they stay on top of whatever the carriers might be willing to do temporarily to help you with your premium payments.
And this is a fluid situation. Obviously, there are a number of questions that we're still getting answered. So what we'll do coming out of the webinar here is this PowerPoint. As you can see, our graphics department wasn't thrilled that we just lumped as much information on each slide as possible. We're going to send this out so that you can check off and affirm you're doing everything that at least we have here. And then we're going to put out some regular communication as we learn about items like insurance and certainly how we're applying the CARES Act, hopefully this week, at the end of this week, in a number of scenarios that at least we're working on. One of our largest expenses is labor. And as Lori and John shared earlier, one of the first steps was part-time hourly labor that's variable. We obviously haven't scheduled because we don't have work for them to do. That's probably the easiest decision to be made about labor that we possibly can. The more difficult decisions are around, stress testing, how long this lasts, how much revenue we have coming in, and what strategic work do we have for, the team members. And we certainly recognize that there are a number of team members that make up this full-time labor pool listening to this webinar right now. So what we're going to share are, for those that are facility operators and owners, what are the options as it relates to how you handle and how we're handling our labor situation right now. But the very best thing that those that are listening can do as an employee or a team member of any of our venues is be the solution. Keep coming up with, and our team is doing a phenomenal job of this. I was back and forth with our finance manager in Hoover last night on some great work that she's doing to mitigate costs and get us prepared, for the comeback while managing our team really well in between. But be part of the solution and, think about innovative, creative ways as we're going to get into in this discussion around ways to save and make more revenue and conserve as much capital as possible on behalf of the operation you're responsible for. And in the meantime, things like the relief aid and other opportunities that we're talking about right now are critically important for us as we manage and handle our staff properly and appropriately. So, John, I'm going to ask you, how are you handling the labor situation, full-time labor, the expense that goes along with that, certainly in the short term here, and by short term I mean through April 30th, and then beyond that as we're forecasting out, how long this might last?
Well, I think we took an approach early on to look at, the possibilities of how long we worked in a venue or if at some point we had to work from home. And so by department, we formulated a 30 to 45 day action plan of tasks that each individual department head could assign and or work with their team. And the key to all that was technology and being able to ensure that everybody can link up and can blue jeans and can have conference calls. And so that technology piece as an expense, we stayed tied to the building computer system, but all that was to formulate plans that, to get strategic work done, work that, because of our pace, we've, deprioritized or put on the back burner SOPs, refining P&L, a myriad of different things by department. One of those big ones is the calendar and your client relations. that's multi people involved with. If you have a robust schedule, the simplicity of moving something to the right may not exist. So how do you work with your clients? So all that requires manpower and it requires communication. And so we develop by department a 30 to 45 day action plan. My folks report to me their tasks that they have completed by the day, and we weekly have a video department head meeting, and we walk through each individual department on what their pluses are, what their minuses are, and how we get better at doing what we're doing, and reprioritize if we need to, and just keep that communication flow going and keep them active doing things that we know needs to be done so that we're prepared for that immediate ramp up.
Yeah, and we're not making work up, right, John? I mean, this is work, as you just mentioned, that needs to get done. And Lori,
it's definitely work that needs to get done. That or whatever, we're doing webinars. We're doing a massive amount of training to update ourselves on POS inventory systeming and how to construct that to our best usage. Everything from ticketing to contract documentation online and e-signing. All those things that we know that a couple people know, we're now spreading it out to where the entire staff knows how the inner workings work, and more people then will become knowledgeable and part of the team as we move forward.
Yeah, we know in Appleton, Wisconsin, at the Fox Cities Champion Center, as an example, we've accelerated the melting of ice, right, to transition a seasonal ice rink to a basketball court, so that we're up and running and ready when that programming is ready to come back online. And I'm sure every venue has their own examples. Down here in Florida, Disney, as an example, had a long-term plan to renovate Cinderella's castle. Obviously, that's all happening right now, so that when they open, that thing's going to be ready and it's going to be sparkling. And so that's been one of our mantras internally, at least. What's our Cinderella's castle in each of our venues, so that when we're open and running, it's going to be like Disney World when we open up and we're ready to go. Part of keeping the staff busy and not making up unnecessary work for them to do, Lori, is something that you've coined for us internally, and that's kind of a role evolution, right? Can you talk a little bit about what that means, from a full-time staffing standpoint?
Sure. Well, many of our team members are there primarily for event operation. And so with that being out of the picture right now, I would think that one of the happiest people in most of our venues right now is the facilities manager, because they have a full-time staff right now, very focused on creating our own, like you said, Jason, Cinderella's castle. So with that, a lot of those operations team members are now preparing. We're in the spring season, so they're preparing flower beds and doing landscaping and pre-emergent and mulching. They are painting the buildings and those little side areas and that you normally don't have time to get to. They are deep cleaning and emptying coolers and freezers and emptying the fryers and cleaning the grills and the hoods. So really just being able to take time to take that deep dive into the facility on things that are just normally you're not able to do during this, what is an exceptionally busy season for us in the spring season. So, and then also, as reference to what John said, there's also the administrative part of this in utilizing our full-time team members into doing multiple budget reforecasts right now. We're not just planning for scenario plan A and plan B. We have plan C, D, E, F, and G as this is playing out as to how we're going to react, and making sure that the finance managers and the general managers are doing that, but also that the business development managers are very engaged in working with our event owners.
As the chief person in charge of your venue, whether you're an owner, whether you're the general manager, or even somebody who's responsible for their particular area, it's critical for you to be out front with a planned cascade of possible actions based on plan C, D, or E, as Lori mentioned. A number of different scenarios might unfold, and it's likely in planning that you need to be more aggressive than your team can imagine right now. That's important. It doesn't mean we have to go there, but it just means we're being responsible and we're prudent in terms of what the end date based on your geography and your region and how long this could last. So John, can you talk a little bit about the importance of that and the decision to furlough or reduce hours or in some cases just reduce workforce, right, if that's the right thing to do, and some of the ramifications of those decisions that obviously everybody's juggling right now?
Sure. I mean, if we've done our jobs properly, depending upon where you are in the development of your venue, you've created a team, and that team has a culture, and you've started to work and synergize together and strategically operate your facilities. And some of that may be in new construction and ramping up to start, and some of that may be in seasoned facilities. With that said, you need to be transparent and honest with them as this situation evolves, so that they know firsthand what you know and what's possible or not possible. And then, keep your culture going with your team as you have these work at home sessions and things of that nature, and hold them accountable and make sure that they are being productive. Our clients want to know that we're, and so if the time comes as we evolve to that phrase of having a plan A, B, C, D, E, F, at some point, if that plan involves some type of reduction in force, then you need to explain to your client and be very open-minded and strategic about what that means in relation to coming back online. So, if we want to be able to come back online in a rapid fashion, then you can't decimate your staff today and expect to come up tomorrow. So I think that you have to take a very strategic approach to it, and obviously look at what is best for your staff as it relates to whether that be a furlough, whether it be a layoff, things of that nature. And I think that, a lot of that depends upon the type of facility we are and what aid may be there for us to provide some relief to our clients. And as well, it's not a simple equation, and it's different, and we need to be flexible and transparent across all of our venues, because it can sometimes be more problematic to rehire and take a longer period of time and a longer period to be productive if we just make a quick and decision today. So I think that everybody has to be planning for this. They have to be very strategic about it. The client has to be very involved in that process, and cross the bridge when we have to cross the bridge, but in the most amicable way possible for our staff, our team, and our culture to survive the situation.
Yeah, and when John refers to the client, he's referring to obviously the building owner. Some of you may be the building owner or the operator in that way. And we're going to come back, I think, to that last topic that John talked about in terms of the ramp back up and being strategic, because the relief that's come out from the federal government is a huge bridge over that gap right now. It is a huge opportunity, and as a firm and as operators, we are all over that right now on behalf of our operations that we're responsible for. So we're going to come back to that. Before we do, just to wrap up the tough part of this conversation and to pick up on something else that John said, and that is let's pick the scenario that is best for our team members and our employees, as well as the overall sustainability of our operation. Bruce, is there anything that you want to add just from a legal risk, HR perspective around these options that are on the screen right now as people are considering how to communicate with and, plan for worst case that hopefully will never eventuate, but plan for that worst case scenario, with their team?
Yes. A general overview of your staffing analysis, how to keep people on, needs to be guided by what kind of entity you are. And so we were on a call this morning with one of our clients who's gone through that analysis to determine what type of entity they are, primarily for tax purposes, so that they know what parts of the federal relief that have been passed, which have been largely focused on enabling employers to keep employees on during this crisis.
Mm-hmm.
And the best relief passed so far has been directed at small businesses. The reality is that small businesses employ the bulk of the employees across the United States and drive the United States economy. And Congress has been very attentive to that. And in all three acts that have been passed in response to COVID-19, small businesses have been a focus of the relief. So to be a small business, you generally have to have fewer than 500 employees. You have to be engaged in for-profit. So, that's an easy one for some of you. And not so easy for some of you is if you're not engaged. Entity that you operate your events and organization is not engaged in for-profit. So there are some exceptions for nonprofits. If you're a 501c3, you can qualify for some of this small business relief to retain your employees. If you are a 501c6, that's a designation that's typically used for chambers of commerce. You could qualify for some of this small business loan and forgiveness relief. And some of you who are on the line now as CVBs, you may be a 501c6 because traditionally some of them were set up as a branch of the Chamber of Commerce, and you might have that designation. But it's important, as we've talked with one of our clients today, in deciding which one of the furlough, what one of these alternatives for your staffing is best for you, is to first understand what kind of entity you are and how you can best apply for this federal aid and relief to retain your employees.
And we're going to elaborate on that in just a second. It was one of the hot requests, when we polled the audience here, is how we can apply that so that we can retain employees. And to John's point, not have to start over as we're strategically planning for the comeback. Before we do, just some practices and tactics, strategies that we've employed from a communication and leadership standpoint. Things are changing every day and, are happening very quickly. So just as a point, we want to always provide vision, and we invite all stakeholders. That's the owners of buildings, that's investors, certainly our staff and team members as well, to contribute to the solutions that shape that vision. But there is a vision, right, for what your organization is going to be coming out of this. At least there should be. And if you're not clear on that vision yet, get your stakeholders around and get clarity on it. Because once you have clarity, everybody can put the strategies in place to march toward it. So all of our strategies and all of the venues and operations we're responsible for, as well as corporately here, revolve around the three that you can see on the screen here. We want to securitize our assets, and that really focuses on security thinking, right? It's around it's about getting our arms around what we've got and trying to accumulate as many assets or capital as possible to ride through, the storm, and then be in a position, not just ride through it, but be in a position to take advantage of the opportunities, on the back end. The second piece is maintaining maximum revenue as much as possible. In some situations, that's zero, right? Events aren't coming in, food and beverage isn't being sold, sponsorship's not happening, participants aren't coming in, it's zero. In other venues and fitness locations and others where there's a membership draw, there is an opportunity to generate revenue month to month. And, that happens through virtual classes and other sorts of solutions that are being provided from a programming standpoint. We'll talk more about that later on here briefly. The third piece, and this is where it's the dichotomy, right, between security thinking, which is number one, and number three, which is discovery thinking, is taking a look at the landscape and the climate, trying to forecast what the new reality is going to be coming out the other end, and strategizing on how we can take advantage, or you can take advantage of those opportunities. Customer bases with programming, events, and other sorts of things that might take place. So as it relates to number one, and I won't read everything on this slide, you'll get all of this detail, but we've found this extremely helpful for us is we've created an internal COVID-19 response team. It's comprised of people in operations, legal, finance, and HR. And specifically for SFM and our managed venues, it includes our COO for SFM, it includes our general counsel, Bruce Rector, who's on this webinar, our CFO, Tony, as well as our HR director, Tammy Swanson. That is our COVID-19 response team, and they are devouring any change that's happening every 24 hours and considering it how it can be applied to the operations that we're responsible for, and then disseminating that information at least to our leaders in the field so they can collaborate really well with our clients and building owners to make sure that we've got a really good approach holistically that we're going after. And as Bruce alluded to, a big part of that is going after this federal aid on behalf of the operations we're responsible for when it's the best course of action for our team members, our employees, and the operations we are responsible for. So, John, before I jump off this slide, actually, what information are you finding is most critical for your stakeholders to hear? Whether that's the building owner, whether that's your team and staff. You don't need to retrace something you already shared about how you're managing and leading the team, in a decentralized way while we're all working from home. But is there anything else that might be helpful to the audience here in terms of
our building owners need to know that you're available and that you're communicating on a routine basis with them. Some of those owners may be municipalities, they may be CVVs, they may have a bigger scope and a bigger picture. So you may not be tied to the hip with them, but you need to be available if they have a question. You need to be involved with large-scale communications, whether it be by department or within the municipality. And whoever your liaison is, you have to talk to those people on a regular basis. I have anything from texting to phone calls to phone seminars on a routine basis daily with my property owners. Rights holders is the same thing. Is the rights holders just want to know what is your plan for my event if my date gets surpassed or if we have to cancel. And it's not always a cancel, it's a postpone maybe. It's a how do we shift to the right? Do we shift this to the next year? How are we going to come up with solutions? Everything we communicate to any level of our groups has to be solutions based. And it has to be current information, so you need to be as well read as everybody else is on what is factual and communicate that actively to everybody, your team members, your rights holders, and your owners.
Lori, structure matters here, rigor matters, right? Just like we've created our COVID-19 response team that's meeting daily, sometimes multiple times a day, to go through what's happening here. What's the level of frequency and structure that you're finding most helpful in the operations of venues specifically?
It really varies right now with our specific client, but it's almost daily communication, truthfully. With these changing times, we are just very engaged, whether it's myself or our general managers at the facility, with the city managers and or the executive director for the CVB, whatever our reporting structure is. It really is, whether it's an email touch base or a text or a phone call, it really is kind of a daily thing. And a couple of other areas that I want to be sure that our participants are also communicating regularly with are really staying engaged with applicants that they may have had trying to get jobs for the summer, and or interns that we're planning on working with them with the summer. They may not have all the answers right now to give them, but stay engaged with them. Let them know that you haven't forgotten about them, because as we try to flip the switch when this is over and become fully operational again, we're going to need those people quickly. And in a market where we just don't know where it's headed, I think we have a better chance of retaining and or getting them to come back with us if we have been communicating with them regularly. And also, I know we have a lot of CVBs that are participating in the call. I cannot express enough to our venues and our CVBs to stay in regular communication about the marketing strategies that you have coming out when what will be the recovery process. We all know that these sporting events can truly be a catalyst for economic development when this is over. When you had contracted events, when you're trying to spread the word that everything's good, they're open for business. So please stay in touch with each other so you are very well aligned about your goals during this process. And also with our facility sponsors. They need our help as much as any time right now. So if you are able to communicate via email or through your social channels, if you have restaurants that are doing curbside takeout, promote that for them. If you have what your bank policies are, help those people that are helping you during the regular part of your season. Help them right now and be that good partner to them.
CVBs, DMOs on the line here that may not control their venues and facilities, right? So that collaboration that Lori's talking about is critically important. And I know for a fact, having spoken with a number of CVBs here, that some of their staff has been just decimated in a number of locations, where, some that might have been fully staffed are down to, a CVB of one at this point. So for those that are, down in terms of resources, to Lori's point, partnering with those facility owners who might have some resources and, throwing the playbook out the window a little bit in what the traditional roles are from marketing and sales and operations, and just sitting down and whiteboarding a bit. Okay, who has time to do what? How can we share in the responsibilities here to make sure that our community is prepared for the comeback when we're ready to hit the go button here, is critically important. And Lori started to talk a little bit about maximizing the capital during closure, and that includes defending the revenue streams that we already have associated with sponsors, as she mentioned, rights holders. And we've been answering a number of the questions that have been coming in, but one most recent is, given the state of the industry, how are you handling canceled events? Are they rescheduling for later in the year? Lori, maybe you can talk a little bit about that as it relates to and under the context of, defending the revenue streams that we do have and those relationships that are going to be important from a cash flow standpoint once we're ready to hit the go button.
Sure. And Jason, I hope you'll forgive me, but I know one of the questions that came in earlier was from Stephen Short, who happens to be a good friend of mine, and he was asking about exactly that. Are our event owners extending seasons or canceling, or what is happening? So first of all, thanks for joining, Stephen. Great to have you on here. But also, this really speaks to the importance and how great it is that we work in an industry of relationships. And those relationships have never, ever been more important than right now, because we are having to have very frank and honest conversations with our event owners on what works for you, what works for us, and how can we get through this together. And I think our contracts may not look the way they looked before. The models may be different from before, but it really truly proves that we are partners in this. And the success of our event owners means our success, and vice versa. We have to survive this together. So I think utilizing and deepening those partnerships, this is a great time to do that. And it really shows that we're out there fighting for each other. And to answer your question directly, Stephen, yes, people. One of the good things that I have seen come out of this in some of our venues is that seasons are getting extended. And I know that's hard depending on sport for some things, but yes, one of our outdoor venues that would normally start closing down more so in November is now extending through December. So all of the above, we are trying to rebook our venues, and whether that means just for next year into the fiscal year, in next fiscal year, or if it means just keep pushing it down the ladder for when we can find a new time to be open. It's really just working with our event owners and facilitating deals that we can see happening in the future. It's kind of a move as you go, be very flexible in this situation, and really work on those partnerships of being able to bring people back into your city and your venue as quickly as possible.
Yeah, and for venues that are also focused on local programming, John, can you talk a little bit about that, the partnership of when it's appropriate to open your doors so that, if other parents are like my wife right now, thinking about 4 or 6 weeks of homeschooling and not getting away is pretty tough. Everybody's going to be looking forward to these types of venues opening back up to provide programming and opportunities for kids and families to go recreate in a positive way. Can you talk a little bit about, planning for that? We're getting into the strategic planning piece as part of this conversation, but it is going to generate more cash flow and revenue certainly as, those programs are set up.
Sure. I think that what we are starting to face is that, once local governments and state governments, federal governments allow us to get our doors back open, then being open for, especially in a few of my venues, the community usage is going to be a key element. And, to the point where summer camp program, we're right now in the reevaluation of our summer camp program, and where we may have half-day camp on 2 or 3 days now that school's been let out in our state anyway, for the remainder of the year, then maybe those days now become full-day camps so that parents can get back to work and get back to some kind of normalcy. The lunch programs, working those things out. So being able to be flexible and change what would be an established routine to a more expanded routine to help out the community, I think is where we're going to be moving forward to, where it makes sense, as well as with our tenants. Our tenants, to Lori's point, a lot of our seasons are shifting, and they're now going to try to get in as much activity as they can through the lost time frame. So if your tenant has an agreed upon time window, then be flexible to the time window for it to shift to another time, and then recoup those dollars as need be, because right now you're not, they're just kind of out in the cold. So I think that, that manipulating this calendar and working as much to provide as much open time when you typically would not have tournaments in, maximizes the use of your venue and helps out the community.
Yeah, and in those tenant relationships, a number of the venues, at least we have responsibility for, have actual tenants in there, whether it's a PT, an OT, some sort of medical partner and those sorts of things. So, engaging in those conversations, because again, that's existing revenue, monthly revenue coming in, that's really important to maximize during this time. In addition to that, on the sponsorship side, there is a way, and we've had a lot of success, I'd say pre-COVID, in engaging our sponsor dollars to help pay for kids and families that otherwise would not have access to our summer camps, as an example. And that is a strategy to go engage with some of these, local businesses once they come out of protection mode, because everybody's right now in protection mode because we don't know when this thing is going to end. But it is a way to engage with those strategic relationships in the community that you either have already or you've been just trying to get in front of, to share with them that every dollar or a large percentage of dollars that they bring in or contribute will be spent to sponsor or scholarship kids into whatever activity or program is coming out of the ground. It's a derivative of we have an SFM access program that does just that, but it could be a really great way to engage sponsors, local philanthropic organizations, and then families, and pair them with families that otherwise aren't going to have access, and really start to create that hockey stick coming back as part of the comeback here. John, we have one other bullet on here, alternative uses, and it's something that's starting to be seen, in the press. I actually saw this idea from Don Crow, who's the owner of Arena Sports, within a few days of the COVID crisis being announced, and I think he's got a great blog going. He owns the Dash platform, a great blog going on just observations as things are coming out. And early on, he said, "Hey, what about cities where hospitals are running out of bed size?" And we're starting to see this idea permeate. I was on a call yesterday with ASM Global, formerly SMG AEG, and they're starting to look at converting arenas and convention centers, in this way, in high impact areas. And we have also been evaluating this, right, John, on behalf of some of our venues. Can you talk a little bit about this particular concept from a facility standpoint, because it could, and we're still firming this up, attract revenue from FEMA and other organizations, if it works out and makes sense.
Yes. So it's not a secret, and it's been, expanded upon a little bit by the president in some of his updates. The Army Corps of Engineers has developed a program where, in strategic areas where needed or where there's a shortage of hospital beds, how we take public uses facilities that have a large operating area, free span area, and converting them into non-acute care facilities. So, we have that model programmed out in the Hoover area right now, should it come to need, and we've also got overlays in a variety of other venues as well. So if your geographic area, runs into a situation where this could be needed, there is a revenue stream from it, and there are a lot of unknowns yet. It's in its embryonic stages of how long they would use the facility for. The documentation I have definitely says that they will convert and they will reconvert and they will manage and they will operate. So, this may be a means, if it comes to your geographic area, for you to have some usage of the space and to regain some kind of revenue base from it. And a lot of unknown questions yet, but it could come to your area very soon. It's definitely worth not only the community involvement, but the usage of the facility.
And keywords to recognize here: non-acute, meaning that this would not be a location where people that are contagious or have something that could be spread. It would be outpatient surgery or rehab, different things that take up bed space in a hospital that aren't as urgent to clear up, ICU space for those that are getting sick, have an illness or need a ventilator. So that's the concept in any of these hotspots, and so it's just worth evaluating, as we certainly are, and we can continue to post updates on whether this particular option has some legs, as we move forward here. Okay, so let's get to the relief aid here really quickly. Bruce touched on a number of these already, but Bruce, I think just in terms of an overview, because this is just a fantastic way for a number of our organizations to bridge the gap, with staffing to get to the other side. And I'm sure, if not all of these organizations, but most of us are receiving a lot of documentations from our accountants, our attorneys, and our banks as well. And if you aren't, I certainly recommend that you get in front of your bank immediately to see if you qualify for some of this stuff. But Bruce, can you give a quick overview here?
Yes, I'm going to stay at a very high level, and hopefully leave some time open for specific questions that you might have about this. But there have been 3 acts passed related to COVID-19. The first one was exclusively directed at small businesses. It enabled the Small Business Administration with additional funding to administer SBA programs, particularly loans, and it issued a lot of loan money to SBA lenders, specifically related to the coronavirus. So that was the first act that was formed. The second one was the Families First Coronavirus Relief Act. If you are a small business with 500 or fewer employees, there are some benefits related to your employees that you have to post in your workplace beginning tomorrow. There's a Department of Labor poster that needs to be posted. If your office is closed because of the virus, then they're allowing certain alternatives for distributing that to your employees. Essentially, it gives family leave benefits and medical leave benefits to certain people who are affected in certain ways by the coronavirus. So that was the second thing that was passed. It also allows for the small business employer who has to grant that sick leave or Family Leave Act leave to the affected employee to be reimbursed through tax credits or withholdings for whatever leave they provide that employee. The third one, which is the far and away the biggest one, was the CARES Act. That has implications for everybody on this call and every organization on this call. When I talked earlier about understanding what kind of entity you are, that's really important as a threshold question as to whether or not this act applies to you or what aspects of it apply to you. It has a provision in it that basically took the SBA loans that were allowed in the first phase one of the COVID relief and allows for aspects of those loans for certain expenses to be forgiven. Mainly forgiven if you do what they want you to do with the loan money, and that is use it to retain your employee base. So there are some things you have to show to prove that you did that at the end of an 8-week period, but that is the biggest thing for small businesses that came out of the third phase of this act. That loan forgiveness, so essentially what they're giving you in the loan on the front end becomes a grant on the back end. That's why on balance, our perspective is that your best relief available to you right now is to qualify for small business relief through the SBA loan program. Now, that may take some creativity, that may take some stretching. We are able to benefit some of our clients by applying for some of their expenses because of the way we are set up contractually to manage their facilities. And for some of you, it may take some stretching because there are a couple of exceptions, which I mentioned earlier, for 501c3s or 501c6s to participate as a small business in this program. So depending upon your relationship with whoever your governing body is, if it's a sports commission through a CVB or whatever your entity relationship is, it could be that you can apply for some of these small business benefits through some parent organization or umbrella organization. And it's probably to your advantage to try to do that if you can. If you can't, you're not totally out of luck because there's other provisions in here that may apply to you, even if you don't apply for the small business relief. Section 2301 has a provision in it that allows the credit to be available for basically employee expense for employers, including nonprofits, whose operations have been fully or partially suspended as a result of a government order limiting commerce, travel, or group meetings. we need interpretation from the federal government, particularly the IRS and the folks administering this, whether or not sports events qualify as group meetings. But my expectation would be that they do. And it allows for organizations that fall under that provision with 100 employees or less to basically get the same tax credit that's available for a dollar for dollar reimbursement for employee expense to help you retain your employees during this time. And then the last thing I just want to say about the third phase of the act was, if you are not either one of these things that I've mentioned, and earlier today we had a call with the CVB, who their determination is that they're really a quasi-governmental entity, that there's also relief for you under the Act, even though you might not qualify for the other things that I've mentioned. There's significant money going to the states. It's dependent upon what the population of your state is, that every state in the United States will get at least $1.25 billion to distribute as needed to municipalities, to government organizations, to help them get through this crisis. So, as kind of a summary on all this, our experience certainly in Gatlinburg was, and everywhere we've been involved in a disaster situation, I would apply for everything you possibly can. I would try to figure out what your options are, your opportunities are to just apply. You can, if you get denied, you get denied, but be on the lookout for whatever relief may be applicable or appropriate for you and your entity, and apply for as much as you can, knowing that you're not going to get everything you apply for, but be aware that there's going to be a lot of money out there in a lot of different ways, and staying on top of that is important to you and going to be important to your organization in getting through this crisis.
Yeah, that's good. Thank you for the overview, Bruce. This is a, critical, we can't overstate this. It's a critical bridge to help us get through this gap in each of our operations. And if you think about the Paycheck Protection Program, just as an example, if it is covering the salaries of our team for, call it April and May into June, or even May and June, right, if we have April covered for this month, and it can get us to July 1, now we're talking, as it relates to the, reasonableness of opening up some of these venues. And it's going to be regional, right? Different regions, different states are going to hit their peak at different times. One of the questions that was asked is, are people really, what are we hearing about people traveling nationally, for different national events? We think that's going to be one of the last things that opens up as, some of these national events, which means it's probably wiser for us to focus on some local area and regional types of events where things are starting to open up and it's safe. And so we're obviously stress testing all of these potential possibilities here. But if we're looking at local, regional types of programs and events, as we start to crawl before we walk and walk before we run as part of the recovery here, that may be one of the quickest way to get some of our destinations open. Obviously, it's fluid. That could change, but that is one of the main strategies that we're looking at as we look at plans to reopen in a way that makes a significant impact for the venues that we are responsible for. John, how else are you preparing for the recovery at this stage?
Well, I think we're taking our calendar in 2-week blocks, and we're looking at what we can do with those events, whether they be local, regional events, talking to those rights holders about, modifying that event, expanding that event, opening it up to different types of kids versus what it was originally scheduled for, how can it appeal on the more local or regional level, as well as looking at our big events. We're talking to governing bodies about whether open evaluation periods are going to be extended, whether you do showcases for Major League Baseball. Is Major League Baseball going to change the draft? All these cogs in the wheel are turning, rapidly, and you need to be flexible enough to adjust to them. and modify for a quick recovery, and not just give up a date, but salvage a date or slide the date. We've had effects to our calendar that extend out to 2022. So, and we're now resolving and providing solutions for major events that are now 2 years down the pike. So, I think you just have to take it small chunks at a time, and you have to be very proactive with all your rights holders about how we can make this happen, and without losing an event or canceling an event. Those are bad terms. It's how we salvage the events.
Yeah, and I don't want the point you made earlier to be lost. How are we innovating and collaborating with, partnering with some of these events rights holders to create new events that can help in the recovery? You mentioned one example, which is a high-profile example because it's a professional sport, but the Major League Baseball draft could move. There are a bunch of collegiate players that aren't being seen right now, and so how are we working with a partner like Perfect Game or others to help serve a population to bring back a sport, right? In that way. So one simple example of how you can innovate and certainly partner with events rights holders to create events that are focused on leading that comeback. Lori, same question to you. How are you preparing for the recovery, and what are you thinking about relative to some of these event rights holders and other programming locally?
Well, I think what you said, really with our event owners, we're thinking out of the box. What are seasons, what are time periods that we have never really worked with them before? Is there an opportunity there? So there's nothing too crazy right now that you can't throw out on the table that might be a possibility. And also, as we mentioned, continual reforecasting from the administrative side, so that when we are ready to flip the switch back on and go into full operation mode, that the leadership has expressed the goals, everything that's going to be required to do that, and what are the immediate goals, so that the team members can respond. And they're sliding at this point. They're ever changing, but being ready and reporting to your ownership group, to your CVB, to your municipality, whoever, that they know that you've got this. You've got this in control, and no matter where the situation moves, you have a plan ready to be put in place.
Right on. Well, I know we're at closing here. We've got a few questions that we didn't answer. We're going to answer you all individually as well. Please feel free to send anything else in that you have questions about that we may be able to answer. For those of you that are thought leaders in our industry, and I know there are a number of you on the call, we would sure like to collaborate with you and partner with you. We want to bring together, this network of venues, certainly to provide solutions to different rights holders as well, so that some of our most strategic partners who are also hurt as a result of this can minimize and mitigate that damage to them. At this point, doubling down on partnership, collaboration is really important. The reality is that there's going to be a shift in customer behavior, and there's going to be a shift in consumer demand depending on what location you're in and how quickly your particular area, community, and state, rebound and how hard it's hit as a result of what's happening right now. And those are all unknown right now. So at this point, obviously, do what you can to build a cash safety net. That includes taking advantage of the programs that Bruce alluded to there. And ultimately, we all need to be prepared to lead this comeback. Our industry's hurting right now. We have a number of organizations that are hurting. We're not trying to cover any of that up. However, we have the opportunity to be the tip of the spear and lead people back into our communities if we do it in a smart and measured way. And as we learn from one another in that way, we are going to come back. There's no question. All forecasts have demonstrated there's going to be a steep growth in our industry, right? According to Wintergreen, Evergreen Research, we were a $25 billion industry this year, and the projections for the next 5 years are just astronomical. Once we get through this short-term blip, and it is short-term, it's just a matter of how short it's going to be, our industry is going to be one of the solutions. So we're looking to be a solution. We're looking to partner with all of you on the call in whatever way we can to be a solution together. And let's lead with that positivity because sports, recreation, tourism, family fitness, and health really matter. The venues that do these sorts of things really matter. And we're going to, again, be on the tip of the spear to get it done. So thank you again for joining us. We're going to email out, this deck. We have other webinars planned. We're going to partner with Sports ETA and some other organizations as well to just continue to flood, the market with content as we learn. If any of you feel like you have potential contributions to that content, we would love to include you in it. Again, there's no pride in authorship here. We want to just get the very best ideas and solutions out to the community at this point in time so that we can all come through this in a really positive way. Thanks again for the time. I look forward to hearing from you and partnering with you in the future. Take care.